The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the April 24th, terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. If you can't dial in, let those fingers do the walking. Go ahead, send me an email, steve@tfnn.com. Of course, inside the Tiger's Den, any ping will do. So let's go ahead and get this show started on terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading down 377 points. The average true range over the last 10 trading sessions, 381 points. So we're trading right at our average true range. The reality is the Dow is down about, from the open, about 531 points. So a little bit more than that. But we're kind of in this range here, this volatile, wide range of trading over the last 10 days. You've got the S&P down 28 points. That's a little over 1%. 2642 is the print. Russell 2000 is off about 0.5%. That's down 7 points. NASDAQ 100 down nearly 2%, 1 8/10% as we speak right now, 119 points. So it is red across the board. Spot volatility index right now is up 11%. I don't know what the end of day close is, but you know the playbook. If, in fact, the spot volatility index closes up by 10% or more, versus yesterday's close. Right now, the exact number is 10.47%. You've got gold up $8. We'll see what kind of meaning that has, if any. That's up about 0.6%. Silver's up 10 pennies, the same 0.6%. Light sweet crude back 50 cents. That's trading out at 68.15. Leading the charge here to the upside. Yeah, there is a charge to the upside. CoStar Group. That's up $18 or 5%. Whirlpool having a good day, up another 5%. That's $7.64. Biogen, BIIB, that's trading up $6, 2.5%. Heidrick and Struggles, no struggles there, up 16% or $5 and change. To the downside, Booking Holdings off $59, nearly 3%. Amazon down 3.5%. That's $52. Google about a little over 4.5%. That's $50 to the downside. Lockheed Martin, get the snot kicked out of it right now, down 6 6/10%. That's $24. That's with volume behind that move of 2.2 million. I don't know if that's big volume or not, but we can always find out by taking a look. And of course, I want to look at what you want to look at. And the first question coming in from Kay. Kay wanted to take a look at the Russell 2000. Kay says, "Hi, Steve." Hi, Kay. Thanks for going ahead and writing in. And how beautiful she put in the subject heading, radio question. It's just so much easier for me to be able to spot through all the emails. I want to get to your email. When you take the time to write me, I want to make sure that I get to your email, especially if it's written or delivered during the show out there. And it's just so much easier when you put in radio question or radio and a question mark or anything along those lines out there, just so that I don't have to deal with all of the, you know what I was going to say, stuff that tends to get to both of our email boxes out there. But Kay specifically was asking if I could take a look at the Russell 2000 or the futures contract, and wanted to know, I would like to short the Russell 2000. Can you give me support and resistance on the 30-minute, or Stevie's red line. We can do all of the above. Let's do this first. Let's take a look at what the TAS market profiles are showing for the old Russell 2000. Strongest of the indices that are out here. Now, you specifically asked for a 30-minute time frame out here, so I'm going to switch the left-hand panel on my screen, and what you're going to see right now, as soon as it totally populates, is there is no market profile for you to be able to use right here. That level was at 1571. You're trading around 1555. Don't forget, I have a 10-minute delay on the Russell 2000 equity futures contract, so there's no profile on a short-term basis for you to hang your hat on. The profile for you to hang your hat, and you're asking to go short, this would not necessarily be the spot, or you make the old reward risk decision yourself. There's a brand new daily profile. Let me go ahead and expand the daily time frame chart out here for you, Kay. And this profile is slightly bullish with regard to its structure, slightly because the center line, which is at 1563, is just slightly closer to the bottom of the box than the top. We're going to call this a neutral profile box. I'd rather do that than slightly. What the how do you make any determination of what slightly is? Well, this says that support, and you ask for support. Can't give it to you on a 30-minute because, in essence, it's not there. But what I can do is the profile that you should be cognizant of. So with regard to if you're going to short, whatever price point that's going to be, your level to your reward level in the Russell 2000 equity futures contract should be about the 1543 level. That's the bottom of its daily box. It's a fresh box out here. Neither the top or the bottom of this has been tested, and you're trading at about 1556 as we speak right now. And on the weekly box, the number you're looking at is 1533. So that's a pretty decent range of support out there, 1533 to 1543. On a 30-minute chart, if we go ahead and we take our 30-minute time frame chart and we go ahead and pull this over here, I don't have any kind of pattern that I can see on a 30-minute time frame basis to suggest that we're at support or what's going to happen next, with one exception. Let's say the market bounces from here, and I don't have the only signal that I have that says that's a possibility, and on a short-term time frame, 30-minute, is the mere fact that on this last wide-ranging bar that we just had, just started the show at 1 o'clock, so that's where my cursor's at. If you're watching us on TigerTV, as that wide-ranging bar was forming, it took the price oscillator from a 30-minute time frame down below its zero line. What that tells you and what that tells me is over the course of the next several hours, we should see price and Stevie's red line, K at asset, and by the way, K on a 30-minute basis, that's 1566. 70 as we speak right now. What we should see is those two things catch up to each other. Now, that could just simply be from Stevie's red line continuing to move lower while the Russell 2000 kind of meanders sideways. It may not take place during the next couple of hours. It could be after today's cash market close, as an example. But typically what you see occur here, much like we did on a 30-minute basis, when the price oscillator, difference between two exponential moving averages, that would be the 19 and 39. As that was approaching zero right here at 3:30 this morning, what we can see is we had that test of Stevie's red line. That's what should come in the next step. If you're asking where would you short from, if that's what you want to do, well, it would have to be Stevie's red line on a 30-minute time frame. Kay, thanks for writing in. I hope that helps you out. You, too, can get answers to your questions. Just send me an email, steve@tfnn.com. Put radio show question, just like Kay did, in the subject heading. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back. Dow's off 393, S&P down 27. And the next request coming in from Maria inside the Tiger's Den. And Maria would like to go ahead and take a look at the ES Mini, specifically the 30-minute chart. So Maria and Kay both wanted to take a look at the 30-minute chart. And we're going to do that. But before we do that, just like because there's some similarities here with regard to the information that I would post. Now, similarities from the standpoint that we were saying, okay, we're looking at the Russell 2000, and we know, or if you don't know, I can show you why. The Russell 2000 is the strongest of the four indices that is out here. And we gave some levels, areas of support, the bottom of a daily box out here. But inside the ES Mini, if we take a look at that same daily profile, and I think that's the thing that is most important. So, Maria, I don't know if you're short, you're long, you're playing some type of option spread, whatever you might be doing. I would think that the piece of information that you want to really know is where is the bottom of that box. And that's at 26.35 and one tick out here. Now, I believe we've gotten down to within 3 ticks of that, or 3 points of that low. My apology. Let me just do this here, especially for all the home viewers. Well, what I first have to do is actually hit the right button on my screen. So give me a moment to do that. We'll try that again. We're going to turn price off. The reason we're turning price off is whereas inside the Russell 2000, you and I were unable to, well, we said what it was. We said it was really equally distributed, distributed, right? Distributed, which really meant that it was a neutral box because the center line was inside the, was pretty much inside the center. Well, if you take a look at the distribution of the market profiles on a daily basis, you're going to see a green line, bottom of the box. 26.35. That's what Maria really wants to know. That's where the so-called back is up against the wall with regard to price. The center line much closer to the bottom of the box. It is there's no other way to reference where the center line is, which is at 26.63. Even though it's 30 points, about 32 points above the bottom. Remember, we're dealing with some wide-ranging trading days, average days out here, and the top of that box is 27.18. Now, the importance of this box, more important than where price is trading at right now, the importance of this box is that if this is a brand new profile, this formed over the last couple of days, yesterday, I believe, today's Tuesday, so it was yesterday. The importance of this profile, it does have a bullish structure. And there's nothing more bearish than a failed bullish pattern. With regard to market profiles, that would be this, the 2633 level. So if we see the ES Mini close below that, then that says, okay, well, where are we going to go next? Well, the where we're going to go next, let's see if we can even figure that out. The where we would go next, we'll get to the 30-minute chart, would be all the way down to the bottom of the weekly box that formed last week. Again, just using profile information, in this instance here, for price projection areas. The bottom of that box is 25.77. So in the case of the ES Mini, it's trading right into a level of support, really as we're speaking, within a point or so, and that is the area to be focused on. From a 30-minute standpoint, if I put a 30-minute chart, that's the left-hand panel, what we're going to see out here is really nothing for you to be able to lean on. If we take a look at the ES Mini on a 30-minute basis out here and look for something to lean on, there's really not. There's not, other than the fact that you'd have that price oscillator down below zero without touching Stevie's red line, 2662. At some point in time, we're going to see these two levels catch up to each other. But it doesn't have to happen between now and 2 or 2:30 or 3 out here. But it will occur. So watch that support level. I think that is the biggest thing to pay attention to. With regard to other patterns out here inside the ES Mini, the other thing I'd say that is bearish as we speak right now, it depends on the close, but it's the mere fact that we have seen the ES Mini now give up Stevie's red line. It is held as support the last 2 days. I don't know how the trading session ends, but I cannot locate any type of bottoming signal other than the daily profile level, so we have to watch that. But trading below 2655, that's the number, says I have more retracement or worse than that. And more likely it's the worse than that when I take a look at the ES Mini. And the reason is this. It's because as long as the ES Mini closed below 2655, we're back to having a falling price oscillator below zero. And that is a bearish signal. That's a bearish pattern. And that would say, okay, you can go ahead and run all the way down at a minimum. Your target now becomes, remember we were taking a look at the SPY yesterday for John in Sarasota. Well, right now we're trading into the swing point from April 2nd. We'll go take a look at the SPY anyways, just to try to get a volume gauge out here. And if you close inside that level, well, with volume or without volume, you can always go test the bottom out there. William says, is it too late to go short? I would say, yeah. I would say the better short most certainly was earlier, was at least at the 26.55. William, to really be able to answer that question, I'd really have to do just more evaluation than really time allows for at this stage, because we'd want to take a look at a couple of different things. You're asking the question, oh, is it too late to go short? There is always another trade, Mr. P. And what I would do, William, is what I would say to you is let the day play out. See if the spot volatility. So, Maria, I hope that answered your question. If not, please just go ahead and type in there or ping me privately, and I'll make sure I give you the data. I just think the most important thing, because of where price was trading, was really understanding where that daily set of profiles was at out there. And then back to William, what I would do if I were you is I would wait to see what the change in the one-day rate of change is for the spot volatility index. Your odds increase that you're going to see at least a bounce, could be bounce or bottom, at least a bounce inside the ES Mini overnight. Typically, by tomorrow morning, you would see futures trading higher. You wouldn't be surprised. And then you'd come back and take a look at chart patterns to understand where is that best spot for you to go ahead and take a short trade. That's what I would do. A day like today, I will also share this with you so that you can simply make that decision on your own. When you have a day like today where the market, in the case of the Dow here, I'm just looking at the Dow, I'll go back and take a look at the S&P if we want, but here the Dow gaps up. Now, you don't see an actual gap in price. What I mean by gap up is that versus last night's close, the market opens higher. and the market opens higher. We've got a wide-ranging bar that has unfolded thus far, and typically when you see, and it never got above inside the Dow, never got above the opening price out here, or if it did, it was just a smidgen. And when you see bars like that form, it's like the day here of March 22nd. And on March 22nd, what you'll notice is that the Dow, same kind of, well, in this case here, we actually gapped to the downside, but the point of the bar formation is very similar. Here, I'll just go to this day. Here's the day of February 8th. February 8th, there was a slight gap up, meaning it opened above the close of the prior day, and you had a nice wide-ranging bar. And where did the market close? The market closed at the bottom of its low. It closed at its lows. And that's more typical of what you would have out here. What I can't do, because you haven't broken through a support level, is now try to figure out whether you should really jump on this train now. So, William, I say just hold off and wait for another trade. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's just carry on this thought. We were taking a look at the S&P 500, the ES Mini, actually, and I'd mentioned the SPYs, and we took a look at the ES Mini, saw there was trading back into the swing point from April the 2nd out here. And we take a look at the SPY. We can see that that's the same thing. That top of that swing point, I'm sorry. We take a look at the S&P 500 cash index. We can see that's the exact same thing. That number is 2638.30. That way, when we turn over to SPY, what we're going to say is, okay, we know it was trading into that swing point, even if it hasn't done that just yet. We were a few pennies away earlier. The top was 263.13. The low is 263.17. So in essence, the swing point has really been tested. It's just the adjustment of dividends and so forth that is making up this slight difference. But here's what we know. So William, here's what we know, and then I'm going to get to Tom, who is the ultimate trader of the TVIX. He's the one guy that absolutely knows how to trade this. He's building Four Seasons hotels based on his success in trading that super volatile product out here. But we'll get back to him because this is pertinent to his question as well. So the one thing, William, everybody else out there, we're going to pay attention to that spot volatility index, one-day rate of change greater than 10%. I don't know where it's going to end the day, but if in fact the market closes like this, then or anything, as long as it's 10% or more out here, that says, okay, you gotta prepare, or you should prepare for at least some type of bounce inside the ES Mini. Or the mix of the cash opener out, say a different story out here. But here's what we know. I'll finally cut to the chase. Volume so far, 51 million shares. Now, straight line math, meaning we divide by 4, multiply times 6.5. That volume inside the SPY is the equivalent of 83 million shares, 82 and change out here. The swing point that's being tested, April 2nd, has volume of 186 million shares. So as we speak right now, we have what looks like a rejection on light volume. So what that is saying is that, William, that would be another reason why you would not go ahead and jump on a short trade as we speak right now. In fact, you get a complete rejection of the swing point. Tom is the one who coined it. Every time I use it, I have to pay him $1. But so I'm $1, Mortimer. And so the deal is, if you can't bust him down, which is what it would mean if you reject it. I don't know where we're going to end the day. I don't know what the volume's going to be like at the end of the day. If this moment was the end of the day, if you can't bust them down, you're going to try to go bust them up. That says you can go ahead and run back up to the upside. Yeah, then the upside can actually be that swing point from April the 18th. Yeah, crazy, as Tom likes to say, deviant, and that would be deviant out here. So that would be another reason. Now, that just simply is the way I will slide into Tom's question, which is about the TVIX and the VIX. So let's go read that. He says, good afternoon, Steve. I say, good afternoon, Tom. Hey, I like that. Look at this guy. Radio show and a question mark. And he even puts in the symbol TVIX. That is the way it should be done. I'm long the TVIX from last week at 7:10, wondering my thoughts. VIX over 10% or under 10% today. So I think we've covered that a bit. I don't want anybody to throw up by talking more about that. We know I'm very clear as to the probabilities of my thinking on what you should do if you see that one-day rate of change greater than 10%. What we can also look for, because you are the expert at trading the TVIX, we go take a look at Stevie's TVIX trading strategy. Just have to find it. I thought it was right here. Here it is. Here's our TVX trading strategy. And that's going ahead and using our TAS market profiles out here. And what you're going to see is there's a brand new market profile that formed for you, Tom. So on the short-term basis, what you're looking for is a close above 803. That's the next area of resistance. What you would like to not see is a close below 785. Now, this is a 3-minute time frame chart out here. So this is just ultra short-term. I don't know what the time frame it is that you're making your decisions on, but the beauty of this short-term time frame on this specific product is that you can use these profiles to make a determination whether you should be in, whether you should be out. When you've got a real momentum play that is going here, you will not see a close below the bottom of its box out there. If there is, you won't see it for more than basically a minute out here. This is a 3-minute chart. And at this stage here, if you did see it close below 785 and it continued to stay below that, well, again, you'd have to know what the next profile is. But I don't see a reason to exit as we speak just yet. Maybe that says something about the S&P 500 as well. But with regard to my thoughts on what you should do if market finishes at its session lows. You've got the spot VIX above 10%, and then you know the play out there. So thanks for writing in, and especially for how clearly you went ahead and sent off that email. Let's take a quick peek, see who is next. We've got Kay. Kay is saying, I didn't pull the trigger at 1574 this morning, so looking to wait until next resistance. You're so kind to give me your view. Well, you're so kind to write in. 1574, what was the magic number up at 1574 out there? And let me see if I can come up with anything. I don't know that I can, but 1574, I was just going to say, what would be another number for you to take a look at? And man, where the heck? It's like my eyes. Where are they? Where are they? Where are they? Oh, it's right here. So the number this morning, 1574. Yeah, I know exactly how you got that. You little sneaky thing out there. Because 1574 was the right number, especially once price moved below that. But the other thing you had at your back was a close below 2684.75 inside the ES and 24.558 inside of the Dow. So I know what you're thinking. Let's go see what HD. It's actually Jim in Denver. Hey, Jim, he wrote a radio show question. Oh, you guys are great. You guys and gals are just simply the best. So let's go see what the question we've got coming from Jim in Denver. What are your thoughts on Mu? M-U. Well, if you're drinking sake, Mu, which is a real sake, it's used to be, maybe still is, Tiger Woods' favorite daiginjo. I think Tiger needs to spend a little time with Stevie, and I can teach him a little bit about sake. I'll teach him about sake. He'll teach me a little bit about the lack of a golf swing that I seem to have these days out here, and we'll be square. But with regard to Micron technology, as we take a look at it, right now, Jim, the swing point that it's dealing with, first place that I'm going to look at, is going to be April the 6th. 79 million shares. You're passing it with 43 as we speak. I'll do the quick math on it, or at least my spreadsheet will. So if we're at 43 million shares right now, it says we end the day around 69 or 70. We're just trying to see if this closes below April 6th low of 47.26. Is it doing it with volume? The answer would be, nah, not really. 70 million versus 79. Your question was, what are my thoughts on it? You don't want to necessarily see it close below that level, because if it does, there's another, the real level to probably be watching is maybe the March 2nd area. Now, that's 52 million shares. You're definitely coming in there with some volume. That's where it last broke out. The low there, 45.95. Let's go take a look at the 3 time frames for Micron Technology out here and take a look at what's going on with regard to profile levels. And when we take a look at profile levels out here, what I would say, Jim, is if it closes below those areas, or if you're looking to get in, which I think you are, right now, $40.11. 3607 to 4011 would probably be the area to be watching. We'll take one more look at it when we come back from this break. As well as anything else that you'd like, just got to send me an email or give us a call. Steve Rhodes with TFNN. Be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So what we're looking at here is Micron Technology. MU is the ticker symbol for Jim in Denver. And he wants my thoughts, and I don't know whether and the question is long or short. So here's the thoughts. Just want to make sure that I'm clear on this. If you see, because we know the price is moving into the swing point from April 6th, what looks like with lighter volume as we speak. A rejection of that swing point low, that's April 6th low. That's $47.26. As long as it closes above $47.26 today, you're at $47.08 with less than 79 million shares. Says, okay, we've rejected a swing point, right where the market talks, walks, and squawks. All this says is you rejected that, couldn't bust them down, will try to go bust them up. Not necessarily the reason to go long, because price would then go test the April 18th level. Could be something as simple as 50.68 or 54.27. If it closes below that level of 46.26, 40. Excuse me, I'm sorry. I was trying to hold that in, and I failed at that. If we take a look at closing below 47.26 with or without volume, that would set up an A to B, a potential A to B equals CD to the downside. And Jim, that would look like this, giving you a one-to-one price projection of 39.81. Now, 39.81 would take you right into a previous swing point. Happens to be a hammer candle, February 9th out there. And that would say you're in the range of between 37.52, 39.81. Maybe at that stage, that would look like a buy. But I don't see. So even if you get a bounce out of this thing and you reject 47.26, I think just step aside as we speak right now, and that is on Micron Technologies. Thanks for writing in. Thanks for writing in our radio show question. Just so easy to spot out there. So we're going to take another quick peek, see if anybody else has written in, because if you take the time, I will take the time as well. So it looks like the email lines are open. Phone lines are open. The den lines are open. I don't see any other questions out there. So what do we want to go take a look at next? What do we want to look at next? Let's move off of the indices out here, I suppose. And let's go look at, what do you want to look at? some of the individual stocks, right? Let's take a look at some of these guys that are and gals that are leading things down. Let's go take a look at Google, see if we can figure out what the message is behind Google. In the case of Google, you're trading down, you're off the session lows, but not by a ton. You're trading out at 1024. Volume behind the move today, you've got volume, 3.4 million shares as we speak right now. The swing point that it is trading into, or at least testing, let's go ahead and draw the top line of that. That's the level of 102423. The volume there was 3.3 million shares. You're at 3.4. So you're already testing that swing point. If you close inside there, this would say Google, for all intents and purposes, ought to go test the low of that swing point, March 28th. That would be 980.64. If you close above 1024.23 today, it very well may do that. Then you have a rejection of the swing point, but because you're moving into it, volume says you're going to go test that swing point again. Could be the top, could be the bottom. We don't know, but 1024.23 should at least be tested, even if it gets rejected today. Hasn't busted a swing point, is only traded into a swing point. It's trading into, in essence, a breakout area, the real breakdancing area, the real breakout area inside of Google. You can see how well established that is. That's because gaps are our friends. That took place on the trading day of October 27th. That was 5 million shares, even though we're at 3.4 right now. Let me see what that actually equates to. What is 3.4? And I'm just spitballing here, but we're right about 5 million shares. So it's 5 million in essence going into the breakout of 5.1. So 987.60 is is an area that is held. I would say if that fails, and really what would have to fail is the low of March 28th. That's 980.64. Then that would be a problem. Otherwise, here's what Google is doing. And quite frankly, at this stage, it just makes sense with regard to what it is we're seeing in the markets. We're seeing nothing more than a huge, now Google's average price movement is $29. We've got more than $29 today, that's for sure. But you can see because of the gap up, because this level's been tested with light volume, you can see the gap down out here. The gap down took place on February the 2nd. You can clearly see, in essence, the consolidation pattern. Now I'm giving you the conservative-ish area, but it's really between 987 and 1157. That's the only market call you and I can make in Google as of 1:47 in the afternoon, and that is on April the 24th. So that's what Google is doing. How about Apple? Let's go see what the old Apple is doing. It is breaking below a swing point. It is right now doing it with a volume of 21.4 million shares. Now that's interesting. Why is it interesting? I don't know. We're going to go see if I can find something that's interesting. 21 million shares equates to a day of 34 million shares, and that swing point had volume of 37 million. So it's going to be close. Now, what Apple could be doing, and that means if it closes below 164.47, well, then what you could be looking at is an A to B equals CD to the downside. Now, it's not much further to the downside. You're 162 and change. The 159.91 is your 1-to-1 A to B equals CD. Is that where it will stop? I'd say probably not. The reason I say probably not is if you take a look at this C point, that's the retracement from the level of the March 13th high down to the low that was formed. That's the swing point we're using April 2nd. And then when you take a look at that retracement out there, about a 0.786, which was really 76.02, what's most important is how price moved off of that C point. Well, that gap to the downside on the trading day of April 19th was not how you want to, well, if you're bearish, it's how you want to see a market move away from a C point, right? The C to D leg. You gap right, in essence, from that C point area. It says, okay, we're headed to lower price, but probably more than a 1-to-1 A to B equals CD. That would make sense because the 1 to 1.272 expansion will get you right into the swing point from February 9th. It's got 70 million shares. So it looks like that's where Apple is headed to. That's in the 157.89. It doesn't have to do it overnight. When does Apple report? Usually they're like Thursdays, aren't they? Does anybody, I'm sure everybody in the den knows. I'm probably the only one that doesn't know when Apple is reporting. It's usually after the bell, and it's usually at about 30 past the hour, as I recall. In any event, at this stage here, 159.91 to 154.73, in that range is likely where Apple is headed to. We have a request to go take a look at the yen. That's coming from Ruby. Ruby wants to look at the yen. Ruby, what are you doing with that yen make it a little bit more helpful for me out here. You're trading at 108.73. We go take a look at what's going on inside of the wow. So now you've got a little shooting star out here inside of the yen. The currency. Now I've got a little bit of a delay, I believe, on the currency pair, but this had completed what looks like right now, Ruby, is a Gartley sell pattern. And can I do this on my other chart? Well, look, you know as well as I do, we can do anything we set our mind to. Well, we're going to be going to a break in about 10 seconds. So I'll tell you what, Ruby, I'm going to get my other yen chart up. I'm going to show you the actual Gartley sell pattern that appears to be forming inside of the Japanese yen. And then maybe, how it is you might want to consider trading it. This is Steve Rhodes with TFNN. You've got the Dow down about 487 points or so. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back. One of our dinners saying this could be an ugly close. There is no reason to think otherwise at this stage of the game. ES Mini, trading below the bottom of its daily profile. That's 26.35. You're 8 points below that. You're at 26.27. We know when we have these days, as you and I looked at, as far as candles inside of the Dow, as an example, you typically finish at your lows. No reason to think there's a huge bounce or anything out of here. We don't see it, at least as of 1:54 in the afternoon. Ruby wanted to take a look at the yen, and we take a look at the actual yen currency pair. Ruby, what I don't know is what today's candle session is going to look like. As we speak right now, it's a hammer candle. Now, a hammer candle occurring at the completion of an A to B equals CD pattern, which is what we've got. That would be the so-called sell the D point out here, and that's the key. Japanese candlesticks are the way that the market communicates to you and I. It tells you what the cavalry, tells you what the bulls and bears are thinking, what their next move is. It's like you having a competitive edge. And I've always said in business, a competitive edge is a good thing to have. It's why you want to know your P's and Q's, and most importantly, your Japanese candlesticks out here. Now, when you have a Gartley pattern, this would be a Gartley sell pattern out here. That's where you had a huge trend. In this case here, you could say your huge trend began, we'll just simply call it from in the December time frame, and it's a trend to the downside that you missed, you wanted to get into. You wait for that A to B equals CD to complete. Then you would come from that as some type of retracement. Now, in this case here, I've got some market profiles, so you're looking at the 107 area. What I would be looking at, if that's the side of the trade, if this is a shooting star, it's very simple. Your stop, by the way, is a close above the top of that. That may be too much for you to take as far as risk. Just make sure you have the appropriate position size. And also, if it's a shooting star, my experience is that shooting stars either work or they don't. It means you would want to see follow through on that next trading session. But the target is 107.48 to the downside. That's target number one, 106.41. But it must be a bearish reversal candle. So just wait to see if that's what you get. The old shooting star inside of the Japanese yen. Folks, stay tuned. Your favorite polar bear, my favorite polar bear, David White, he's up next. After that, because it's Terrific Tuesday, Tom O'Brien from 3 to 5, and even better, got Andy Heck to take it on home from 5 to 6. Take care, folks. Thanks for being here. We'll see you tomorrow.
Larry Pesavento will be hosting a 90-minute webinar this coming Tuesday, April 24th, for all Fibonacci 24/7 subscribers. Larry has teamed up with fellow trader Jim Bartoloni for this informative 90-minute workshop, taking the ABCD pattern to the next level. Throughout this 90-minute live webinar, some of the topics Larry and Bart will be discussing include the origin of the 1.618, the golden mean, the relationship between numbers and cycles, time and price, the simple math behind market moves, and much, much more. This workshop will be archived if you can't attend live, and all new subscribers get a 30-day money-back guarantee when signing up for Fibonacci 24/7, so you have nothing to risk. For all the details and to sign up for Fibonacci 24/7 today while gaining access to Larry and Bart's webinar taking the ABCD pattern to the next level, visit the front page of TFNN.com now.